G'day folks, welcome back to another update for gold and silver. Now we're expecting a bit of a short-term pullback due to some bearish divergence. Before we go any further, make sure you hit that like and subscribe button to support the channel. First, in terms of a bit of an outlook for both gold and silver, gold prices have recently fluctuated around $26.50 per ounce, influenced by US economic indicators and Federal Reserve policy expectations. A weaker US dollar and geopolitical tensions have bolstered gold's appeal as a safe haven asset. Analysts project potential increases towards 2,900 to 3,000 in the coming months, driven by central bank purchases and investor demand. Silver, following a 21% gain in 2024, has started 2025 positively, trading around $30 per ounce. Its performance is closely linked to industrial demand, particularly from green energy sector. Analysts suggest that silver could reach $35 or higher this year, contingent on factors like China's economic recovery and US monetary policy. So first, looking at the silver price, we'll look at the long-term trends first off, with the monthly, the weekly and the daily. And for those new to the channel, these moving averages we use on the CCI 150 and the prices are attached in the description below in a video, so you can access that after this video. So what we've got here is on the monthly, the price is well above its moving averages, giving us a bullish move on the price. However, and likewise on the CCI, however, the CCI is broken into that moving average range, which is giving us a bit of caution, so we might see a bit of a pullback longer term, so just be careful of that one. On the weekly, it's actually broken below those moving averages on both the price and the CCI, and that was a result of this bearish divergence. You can see there lower highs on the CCI on the weekly versus higher highs on the price, and that actually pulled back. If I draw a Fibonacci between that high and that significant low, that's a 38% level pullback. It's actually executed. Notice, now it's made a bit of a pullback to the upside since, but notice the CCI is still dropping off, still bearish, so just be careful about going long on the weekly. On the daily, however, what we've got here, it hit this resistance up here at 34.87, bounced back down, it's bounced off this minor support at 28.74. Now you'll notice here as well, it's just a fresh breakout to the upside on the price, and also it's broken above the daily as well, so bullish movement, slight bullish movement on the daily. However, notice we've got a bit of a pullback as well, so that might pull back. Now, we'll always look at the smaller time frames, even if you're trading on the daily. So if we go to the intraday time frame, so even if you're trading on the daily, we take the direction and we consider any micro moves. So on the hourly, or if you're trading on the hourly, we only trade in the direction of the daily. So here, for example, we've got back here, it's a few divergences happening. More recently, we've got now a bearish divergence versus, say, lower highs on the CCI versus higher highs on the price, and we may see that pullback very likely. And what we expect is a minimum, take it back to that low of a Fibonacci. You can see there it's already hit that 23% with those wicks of those candles, but you'll notice the CCI is still dropping, so we may very likely see it fall further into that range. So if I mark that between that, try and get it accurate, between that 23 to 38% level, it's already hit that range, so effectively that divergence been hit, but we may see it fall further because that CCI is still dropping, and that's indicated also by the pullback on the daily as well. So just carefully, I'd wait for this to break higher to go long. If that daily is still in a bullish mode, I'd like to see this break higher on the CCI, but also on the price to go long again, so just caution on that one. So here, looking at the gold price, again on the long-term trends. So on the monthly, still very bullish on the price, although similar to silver, it's pulled back into that moving average range of the CCI. Just as a note as well, we had a bearish divergence back here, a very long-term bearish divergence versus higher highs on the price. And you can see there it pulled back to that 38% level. So if I draw a Fibonacci down to that significant low there, it hit that 38%, went as low as a 50%, and then it bounced out of there. With these divergence, it's a minimum retraces to that level. More than 90% of the time it hits these ranges, and often it does actually break a lot lower before it readjusting. Sometimes it actually has a full reversal. So it doesn't mean a full reversal, these divergence, it just means a minimum retrace to this 38% level. Like I said, there's no divergence currently on the monthly. On the weekly, if I zoom into this one, we do still have a bearish divergence. Now this has already been hit. If we drew a Fibonacci between that range, you can see that's already been hit. Now, if we take it back further, we can expect further declines. You'll notice the CCI is still dropping, so that's not a positive sign to go long. I would wait for this to break higher on the weekly to be more confident about going long. So just be caution about buying gold at the moment. on the daily, it did hit this resistance up here at 27.90, bounced back down off this minor support at 25.66, and is currently in this minor support resistance range. Now you'll notice on the daily, the CCI is broken above the moving averages of the CCI and also above the price moving averages. So it's giving us a bullish signal in the shorter term, on the daily. So if you're trading on the intraday, meaning the 1 hour or other time frame on the intraday, you take direction based on the daily trend. So you only go long, you don't go short. But you'll notice here again, similar to silver, gold is showing a 1 hour bearish divergence. Lower highs on the CCI versus higher highs on the price. And if we to draw a Fibonacci retrace from that high to that low, and I'll draw the target range, we can expect it to hit as a minimum that range. It may actually just touch it and bounce, or it may actually fall a lot further. How far it's going to go, we can't tell. We always just track the CCI. At the moment, it's tracking to the downside, still bearish, and the price is still above its moving averages, but it very likely is going to fall. So long as this CCI remains in a downtrend, the price could still rise, of course. It has happened with many other charts in the past. We just keep tracking it. Eventually, we'll just readjust the Fibonacci range as it happens. To support the channel more, hit that like and subscribe button and share the video. For added benefits and the cost of a coffee, consider subscribing to the Patreon page, where we look at weekly scans of bullish trending shares and insider trades that may have occurred. Thanks again, and see you in the next video.